Hey guys, welcome to this YouTube channel where you learn everything Forex trading. In this video, we're going to be looking at the Forex institutional order flow, how to identify and mark out valid order flow. First, I want you guys to understand that institutional order flow trading is a concept that reveals the directional bias of the markets, which is actually crucial for making informed trading decisions, and reveal where institutional participants manipulate and influence prices to go. The manipulation targets actually the liquidity pools, such as the stop losses or the pending orders at previous high points or low points, which we refer to as the internal liquidity. It also targets the external liquidities, which is actually the higher time frame market directional bias. The internal liquidity are actually the lower time frame price delivery. So you must understand that mastering order flow trading empowers traders with the ability to navigate the market with precision. So looking at the charts here, we actually have the bullish institutional order flow. In the bullish institutional order flow, we look at the selling move before the buy move, meaning we pay attention to the retracement before the impulsive move. And then we must understand that in the bullish institutional order flow, the price is actually looking out to take out the buy side liquidity, which is actually this region, the high of the market. That is the swing point that the bullish institutional order flow is actually looking at to take out. So we must also understand that in the bullish institutional order flow, you concentrate on the bullish order blocks and not the bearish order blocks. We're going to look at that when we come to the charts. So you must understand that when you're looking at the bullish institutional order flow, you pay attention to the sell move, before the buy move, meaning you pay attention to the retracement before the impulsive move. So that is what you mark out as the bullish institutional order flow. You're going to look at the last selling move before the buying move. That is for the bullish institutional order flow. Looking at price, making a move to the upside to take out the external liquidity, the buy side liquidity. So that is what we pay attention to in the bullish institutional order flow. Paying attention to the bearish order block is not advisable, as it is prone to fail because the institutional order flow is actually bullish. So it's not right to pay attention to the bearish order block in a bullish institutional order flow. Now let's look at the bearish institutional order flow. In the bearish institutional order flow, we pay attention to the buying move before the sell move, meaning we pay attention to the retracement because the retracement is actually the buying move in the bearish institutional order flow. And in the bearish institutional order flow, price is actually targeting the sell side liquidities. So the lows are actually the sell side liquidity. So price is actually targeting the sell side liquidity to take out the sell side liquidity. So we pay attention to the buy move, meaning we pay attention to the lows and the highs, the lows and the highs, the lows and the highs in a bearish institutional order flow. So we pay attention to the bullish move, which is actually the retracement. And in the bearish institutional order flow, you don't pay attention to the bullish order blocks because the bullish order blocks are actually prone to fail in a bearish institutional order flow. So we concentrate on the bearish order blocks in the bearish institutional order flow. So we're going to look at the chart for examples so that you perfectly understand what I'm trying to pass to you guys. So you can see from the charts here, we have the movement to the upside, and then we have this move to the downside, the pullback, and then we have the move to the downside, the pullback, and then we have this range in markets condition here, and then when we come here, we now have this push to the downside here. Now you can see that we have our swing high, our swing low, our swing high, and then our swing low here. we have a swing low, and then we have the swing high here. Now, in the bearish market condition, we pay attention to the bullish move, which is actually the retracement. That is what we mark out as our institutional order flow in a bearish market condition, because the market is actually taking out sell side liquidities and then breaking structures to the downside. So meaning this is now our order flow. The bullish move here is our order flow, meaning we have from this swing low to the swing high, giving us the markouts for the order flow. And then you would see that price took out the sell side liquidity, and then we have a pullback to mitigate the order flow. So, and then we see price again push further to the downside. Our next institutional order flow is actually now this move here. This is the next institutional order flow here. So basically what I'm trying to let you guys understand is, let's look at this market condition that we are in, a bearish market condition. We have the pullback, push to the downside. We have the pullback, push to the downside. We have the pullback, and then we have push to the downside. So how do you mark out the institutional order flow in a bearish market condition? You pay attention to the pullback, the buying move before the selling move. Meaning in this condition, we take it from the swing low to the swing high. From the swing low to the swing high. This is now our order flow. Now you can see price then move to the downside, and then price took out the sell side liquidity and broke structure. So price moved to the downside, took out the sell side liquidity and broke structure. Now you can see we now have the pullback. Price mitigated this institutional order flow. Price mitigated this move, and then we have the buying move before the selling move that took out the sell side liquidity and broke structure. This is now our next institutional order flow from the swing low to the swing high. Now we have price push to the downside, took out the sell side liquidity and broke structure, and then we have our retracement returning into the order flow to mitigate the order flow. And then you see price then further move to the downside, took out the sell side liquidity and broke structure. This becomes our next order flow to mark out. The buying move before the sell to the downside. So what we would be anticipating in this market condition is to see price return to mitigate this order flow and then further push to the downside. And then we have our new institutional order flow here. The next anticipation is to see price move to the upside to mitigate this order flow, and then we see price push to the downside, and then we have our next order flow created. The next anticipation is the move to the upside, and then we see price push to the downside. So this is the condition we want to see in a bearish institutional order flow. You mark out the last buying move before the selling move. In the bearish institutional order flow, we are looking at price taking out the sell side liquidity, breaking structures to the downside. And then we mark out the buying move before the selling move as our IOF, institutional order flow. So now let's look at a bullish institutional order flow. Now we have price moving to the upside. We have the impulsive move, we have the retracement, the impulsive move, the retracement, we have the impulsive move, the retracement, and then we have the impulsive move. So this is now actually the bullish institutional order flow. We have markets, we have the price taking out the buy side liquidities, and breaking structures to the upside. So you can see from the charts, would now realize that price moved to the upside and then broke structure here, took out the buy side liquidity, pushed to the upside, broke structure here, took out the buy side liquidity, pushed to the upside, broke structure here, took out the buy side liquidity. So in the bullish institutional order flow, this is how we mark out the order flow from the high to the low, meaning the selling move before the buy move that takes out the buy side liquidity and breaks structure. So you can see price move to the upside. Took out the buy side liquidity, and then you see price return to mitigate the institutional order flow, to mitigate the IOF. And then you see price move further to the upside, took out this buy side liquidity. This is our next institutional order flow. The selling move before the buy move that takes out the buy side liquidity. And then we see price take out the buy side liquidity, and then what we are expecting or anticipating is to see price return into the IOF to mitigate the IOF before we have a further push to the upside. This becomes our next institutional order flow to mark out. The selling move before the buy move. So our anticipation is to see price drop to mitigate the IOF, and then we see push to the upside. This becomes our new IOF to mark out. The next anticipation is to see price mitigate the IOF, and then we see price push to the upside. So this is actually how you mark out the institutional order flow in a bullish scenario. So, and when you mark out the IOF zones, we're going to be paying attention to sponsorship candles within the zone, order blocks, fair value gaps, breaker blocks. I'm going to head back to the chart to look at this from a real-time chart examples. So from the chart, you can see we have the push to the downside that took out the sell side liquidity. We have the pullback, and then further push to the downside that took out the sell side liquidity. We marked out the buying move before the selling move that took out the sell side liquidity and broke structure. We marked out the buying move before the push to the downside that took out the sell side liquidity and broke structure. So you can see now we have our next institutional order flow is actually this move here, from this swing low here to the swing high here. This becomes our next institutional order flow, because you can see price dropped to the downside and then took out this sell side liquidity. So we still have now price push to the upside. This becomes our next IOF to mark out. And then we can see price drop to the downside, took out this sell side liquidity and broke structure. Now you can see price return to mitigate the IOF. You can also see when price took out the sell side liquidity here, price returned into the institutional order flow to mitigate it, and then we have further push to the downside. You can see also in this scenario here, price took out the sell side liquidity, and then we have price return to mitigate the IOF. Price took out the sell side liquidity, and then we have price push to the upside to mitigate the IOF. So this is how you look at institutional order flow. We're going to look at this chart in depth to actually understand how to mark out institutional order flow properly, and how to look out for valid zones or valid moves that you mark out as your IOF. So now you would see we have our order flow here. So price took out the sell side liquidity and broke structure to the downside. Now we have the pullback into the IOF. Price returned to mitigate the IOF. And then we have price move to the downside and then took out the sell side liquidity again. Now you can see we have our first order flow here. The buying move before the selling move that took out the sell side liquidity and broke structure. And now we have the return of price into the IOF to mitigate the IOF. And then once price mitigated the IOF, fill up this inefficiency, this fair value gap here, price fell to the downside, took out this sell side liquidity. But we do not have a valid break of structure here, because this bearish candle did not close below, the body did not close below the low of this low. The candle body here did not close below this low. And then the next bearish candle that we have, the body of this bearish candle did not close below the low of this bearish candle. So we do not have a valid breakout structure here, but we have the fact that price took out the sell side liquidity here. This is where we have a valid breakout structure, meaning this low, the transfer of the breakout structure happened here. This price, this candle closed below this low and then this lowest low. So this is where we have the valid breakout structure, meaning the breakout structure is transferred from this low to this region here. The break of this low is validated by this candle move to the downside. This body, this full body candle that closed below. So we now have this buying move as the valid institutional order flow that led to the break of this low. That is why you'd see I marked out this buying move as an institutional order flow. And then you can see when price dropped to the downside, price returned to mitigate this order flow. And then we have this reaction here. So we now have price returning to mitigate our institutional order flow that lies here. You can see price mitigated the order flow that actually gave us a valid break of this low. We have this move took out the sell side liquidity, but this is the actual move that gave us a valid break of structure, and this is the bullish move that sponsored this bearish move that gave us a valid break of structure here. So we marked out this bullish move here as an institutional order flow because it gave us a valid break of this low. This move took out the sell side liquidity, but this move gave us a valid break of this low because this move gave us the bearish candle that closed below this low and this low. So we now see price return to mitigate this institutional order flow, and then we see price ranging, and then price came up to mitigate our actual institutional order flow, the move that took out the sell side liquidity. So now we have our high resting here, and then we have our lowest points here, because you can see this is the lowest point because this low is lower than this low and also this low, and this is our highest points. This is our high. So we have price created this high, and then we see the move to the downside that took out this low. This becomes our institutional order flow from the low here to the high here. This becomes our institutional order flow zone. This becomes our new IOF zone. So we can see now price took out the sell side liquidity, broke structure, took out the sell side liquidity. And then we now have this candle, this low is our lowest low. So this is our lowest point, and then we have the next buying move. So price broke structure, took out the sell side liquidity, and now we have our low points here, and then we have the buying move to mitigate the IOF, the institutional order flow. So this becomes our new IOF from this low to this high becomes our new IOF. And then we have price again pushed to the downside, took out the sell side liquidity and broke structure, and then we have the pullback. We're not going to regard this buying move as an IOF because this buying move is an inside move within this bearish candle here. This is not a valid pullback because this is the lowest low, and then this move did not push sufficiently to the upside to take out the high of this bearish candle or to take out this high point here. So this is not really a pullback because this is just an inside move within this bearish candle. So this is now our new IOF zone. And now we can see price drop to the downside, took out the sell side liquidity and broke structure. Now you can see price return to mitigate the IOF by filling this inefficiency that price left here. So price return to mitigate the IOF. This becomes our new institutional order flow from this low here to this high. This is now our new IOF zone. You can see that this is the lowest point. This is our low. This is our lowest point because this low is lower than this point and this point. So we now have, this is our high, this move, this is our high. But you can look at it, ideally, this is our ideal institutional order flow from this low to this high here. Because this is the last buying move before the push to the downside that took out this sell side liquidity. So price took out this sell side liquidity, but we do not have a valid break of structure here. We do not have a valid break of structure here. So the break of structure was transferred to this candle here because this is the candle that closed below the low here. This bearish candle is the candle that actually gave us a body candle close below this low. This move took out the sell side liquidity but did not break structure. So we now have this pullback to the upside that gave us the bearish move that validates the break of this low. So this, we now marked out this bullish move that gave us the move to the downside that took out this low, that gave us a valid break of structure. We regard this also as our institutional order flow. And then you can see when we drag this out to this point, you would see that price came back to mitigate this IOF zone that gave us the push to the downside that validates the break of this structure. This move grabbed the sell side liquidity, and then we have this bullish move that gave us the bearish move that gave us a valid break of this low. All these are wicks, no candle body close below the wicks to validate a break of structure. This is the bearish candle that gave us the valid break of structure. Price return to mitigate the IOF here. Now you can see now we have, this is our lowest point. This becomes our new IOF from this zone to this high here. That becomes our new IOF. When you see, now you would see that what price pushed to the upside, gave us a move to the downside, and then took out the sell side liquidity. So this becomes our institutional order flow. Now we have a valid pullback here. We're going to do a video to actually explain more on how to mark out pullbacks. This becomes the lowest candle because this low is lower than this low. So this is a lower low. This becomes a lower high because this move to the upside took out the high of this candle. So this is a valid pullback. So meaning this is a buy move before a sell move because this is a valid pullback because this candle took out the high of this candle because this candle has the lowest point here. It is lower than this other bearish candle. And then this move to the upside took out the high. So this is a valid pullback. So this is a valid buying move before a sell move. So we have this also as an IOF. So you can see, let's stretch out this to come later on to see what reaction we have here. So we have this also as our IOF. Now we have price push to the downside. We have this also as a valid pullback because you can see what we have here is price came to the downside. This is the lowest candle. This candle gave us our lower low here because this wick is lower than this wick. So price took out this sell side liquidity, and then we have a valid buying move because this move took out the high of this candle. you can see that this move, this candle took out this high, here. So we have a valid buy move before a sell move. So we also mark out this zone as our IOF. So let's stretch this out to come see what happened in the future. So you can see how we paid attention to marking out the order flow in this bearish move and how we're seeing price returning to mitigate the IOF. Let's return to these zones. I said let's mark out and then look at what happened in the future. You can see now we have this institutional order flow that pushed price to the downside, that grabbed this sell side liquidity. And then we have this pullback that further pushed price to the downside and then gave us a valid break of structure. Because you can see this candle body did not close below this low, but price took out the sell side liquidity here. Let me enlarge this so that you see. You can see this is the lowest point this week. Took out the low of this candle, took out this week, the low of this week. So we have a valid pullback. Price took out the high of this candle. So you can see a break of structure is now valid because this candle moved to the downside and then closed below the low. Now you can see what we have is price returning to mitigate this IOF zone, and then we see price push further to the downside. Now we have unmitigated IOF resting here. We have unmitigated IOF resting here. So you would see that price return into this IOF to mitigate this IOF. Price return into this IOF, also to mitigate this IOF. So you can see price return mitigated this unmitigated IOF. So you can now see also, let's stretch this like this. So you can see price return mitigated this IOF and also price mitigated the IOF above. Now, when price mitigated this IOF, we have pushed to the downside, but this move did not move sufficiently to take out these low points. You see what we have here is price push to the upside, mitigated this institutional order flow, but price now return did not move sufficiently to the downside to take out this low points. And then we now see that what price moved to the upside and then took out this high. So in this scenario, we see that the condition of the market is no longer a bearish institutional order flow, but we are now in a reversal, condition, anticipating a bullish institutional order flow to be created because price took out this low. This is the high point that gave us the move that took out this low. Now price pushed to the upside, took out this. We have a change of character here. And then price returned to the downside without moving to break this low point. And then we now have a push to the upside that also took out this point here. So we are now in a bullish institutional order flow because we have our change of character and now we have a break of structure here. So now we have our change of character here. Price took out our high points that printed this low point that broke this low, that took out this sell side liquidity. Now we see price push to the upside, mitigated this IOF. Now we see price drop to the downside, but price did not move sufficiently to the downside to break this low. So we're now going to now switch from a bearish institutional order flow to a bullish institutional order flow. So where is the buying move that sponsored this move that gave us a break of structure here that took out this buy side liquidity? Because you can see price took out the buy side liquidity here, took out this buy side liquidity. So we have our break of structure here. Price broke this high here. So we have our breaker structure here. So because this is the selling move that gave us the buying move that took out this buy side liquidity. So this is our order flow. This sell move from the high to the low is our IOF zone. So we have the high to the low as our IOF zone. And then you can now see price return mitigated the IOF zone. But where is the most recent selling move? You can see this is the most recent selling move. Within this IOF, we have this move here. So price return mitigated, and then we are seeing push to the outside. Because you can see this move to the downside, took out this low, gave us a move to the upside, and then you can see we have our break of structure. So we now have price again move further to the upside. We have price took out this buy side liquidity. Where's the selling move that gave us the impulsive move that took out the buy side liquidity? This is our entire selling move from this high here to the low here. This is now our IOF zone. And then we can see price push to the upside, return to the downside, give us another selling move before a buying move that took out this buy side liquidity. This becomes our new IOF zone, the high to the low. Now we have price return mitigated the IOF, price return mitigated the institutional order flow, and then we see price push to the upside again and took out this buy side liquidity. So we'll mark out our new institutional order flow zone. This is our new IOF zone here. So this is our new IOF zone here. We won't regard here as a swing high. We won't regard here as a high point, because this move, this pullback, is not a valid pullback, because this is our highest point, but this pullback did not pull sufficiently to sweep the low of this candle. So this is not a valid pullback. This is just an inside move. So it's just an inside move within this candle. We do not have a pullback here. So you now see price push, took out this buy side liquidity. Now we have this as our next institutional order flow zone to mark out, because you can see this is the highest candle, and then this move to the downside took out the low of this candle. You can see it. Price took out the low of this candle. You can see this candle took out the low of this candle that has the highest points here. So this is a valid pullback. I mean, this is our sell move before the buy move that took out the buy side liquidity. So this becomes our IOF zone. And you can see price push to the upside, took out the buy side liquidity, broke structure, return into the IOF zone. Return into the IOF, mitigated the IOF, and then we have push to the upside. Now, don't forget we have an unmitigated institutional order flow zone here. So after price mitigated this IOF, push price to the upside, gave us a new high, you would see price return to mitigate this IOF that price did not mitigate. So you see price return to mitigate this IOF. And then you see we have price push to the upside. And then price took out this buy side liquidity. Where's our new institutional order flow zone? From this high to this low. From this high here, from this high to this low becomes our new IOF zone. So you can now see price push to the upside and then took out this buy side liquidity. Now within our IOF zone, the large IOF zone, you can see that we have this IOF zone, because price pushed to the upside. Now we have a selling move before the buying move that broke the structure and took out this buy side liquidity. Because you can see this is the highest candle for this move to the upside. This is the highest candle. And then you have this move to the downside that's pulled back sufficiently and then took out the low of this candle. Took out the low of this candle here. So we have a valid pullback there. So meaning we now have our IOF zone here from the high to the low here. So we have this as our IOF zone. And then you can see what happened to price return after sweeping the buy side liquidity, broke structure, price return mitigated this IOF within our bigger institutional order flow zone. Price return into it, mitigated it, and then you see price push to the upside. Price return again the second time, and then we are seeing price moving to the upside. So this is how you mark out the institutional order flow. And earlier I mentioned looking at sponsorship candles within the IOF zone. In the next video, we're going to be looking at what to look out within the institutional order flow zones to anticipate entry zones. I hope this video is of help to you. So you can like, share, and subscribe to our channel as we bring the next video your way that explains the sponsorship candles you need to look out for within the institutional order flow zones. Cheers and God bless.